Today, I'm going to be showing you guys exactly how I called this entire run up on Ethereum. So, as you can see, on June 23rd, I posted that Ethereum looked like a good long opportunity. And if we check on June 23rd, Ethereum closed at $2,400 flat about, right? And so since then, we're now at 4,500, peaked in 46 today. And if you do the measured move to see how far we've ran up since that call, we've ran up almost 90% on Ethereum. So why exactly did I say that Ethereum was going to make a good run? Well, it all starts with my STIM model. So STIM stands for Sweep, Tap, Inversion, Momentum. And I'll get into the chart example of this in a second, but just to kind of help you guys conceptualize. The first thing I always want to see is a liquidity sweep of some sort when I'm looking for an entry, right? So you want to take out a low if you're longing or a high if you're shorting. Next, when we make that liquidity sweep, I want to be tapping into a higher time frame fair value gap. So say we had this low right here, and when we swept, we overshot down, obviously because we're sweeping, and we are now tapping into a higher time frame fair value gap. Then I want to go back onto a lower time frame of some sort and look for an inversion. Now, what does that mean? On the way down to sweeping liquidity, if we're looking for a long, for example, I want to have made a bearish fair value gap, right? So say this was the liquidity sweep right here, okay? And on this leg down, I want to see some type of bearish gap. And then I want to see an inversion, right? Which means we close back above it. And the M is for momentum. I want to see good momentum occurring during this move, right? So when we're inverting this bearish gap that we made on the way down, I want to see strong momentum. I want to see a strong push from the buyers, which confirms that this was just a liquidity sweep to shake out longs, right? And so we'll go into the chart example right now. So as you can see on Ethereum, we're just going to go to the day that I entered the trade, okay? And right here, you can see this was June 23rd, right here, as it says on the chart. And this right here was my model in full effect, okay? Now, why did I enter this? What was I looking at? Okay, so first, we had a sweep of liquidity. We had these internal lows, this one and this one, from this massive consolidation range that had lasted about a month or two, right? And so we swept out those internal lows. We probably faked out a lot of people, shook out stops, make people think we were going down, right? Because at this exact point in time, we did look pretty bearish, okay? But you don't want to overreact and chase a short here because look, the very next candle, we end up getting a very aggressive move up. Now, the other key to this trade, if you look at the weekly chart in relative to where this dip was happening, you can actually see that we were trading down into a very significant bullish fair value gap on the weekly chart, right? And so as you can see, we'll just slap the template on it. This was a weekly fair value gap. So now when you go back to the daily chart, and once again, I mark these things. I'm always charting. I'm always looking for setups. So you might not have caught this if you hadn't charted and kind of recognized your environment, right? But if you are charting and you're looking and doing your due diligence, you're going to catch these type of setups. Okay, so look, once I noticed we had swept liquidity right here, and really this low as well, but the main one was this one, right? We swept this internal low, both internal lows. I don't know why the lines are being annoying right now, but we had swept liquidity very clearly, and we had tapped into now this bullish weekly fair value gap. So you can assume once we sweep liquidity and we're delivering off this bullish weekly gap, all you want to do now is wait for some type of entry signal. Now, what is my entry signal? Well, that's a very good question. It is the inversion, okay? So notice right here on this bar, we made a daily bearish fair value gap, okay? Now we'll color it red to kind of help you guys get the picture, and I'm going to delete this weekly bullish gap because you guys also get the idea. Okay, so look at this right here. After sweeping liquidity and delivering or tapping into this weekly bullish gap, we had left a bearish fair value gap on the way down. Now, once again, that is what I want to see the inversion on. So as you know, an inversion fair value gap is literally just you disrespect a gap, right? So in the 2022 ICT model, it's often taught that a fair value gap serves to help you continue a trend, right? So right now we're downtrending. In the 2022 mentorship, you might think, all right, we retest, go back down. Okay, so when you're looking for an inversion, you want the opposite to happen. You want to move so bullish that it completely disrespects this bearish confluence. So, right, you want to move right up through here. And if we go and see what the next candle did, we inverted, right? So this now becomes bullish because we had this bearish fair value gap that was supposed to send us lower, right, by ICT principles. But no, we actually are so strong and the buyers show up so hard here that we literally completely close above this bearish gap and disrespect it. And notice, It's STIM, STIM, sweep, which we did here, right? We swept liquidity. We tapped into a higher time frame for value gap. Now we got the I, we inverted, and this is also M because look, this is momentum. Ethereum put up an 8% up day when we swept this, right? So this green candle right here was an 8% move up. Now, some people might say, oh, well, why would you chase along after we've had an 8% up day? Well, because real quick, if you're enjoying this content, make sure to like the video and subscribe if you want to see more. I post stuff like this several times a week to help you all make more money in the market. The inversion, right? We're looking at the higher time frame here. We had still sold off a bit. We're just back to the bottom of this range. This is a good time to long. This is like classic manipulation, right? We had a super evident leg up, and now we're just kind of consolidating. We come down, manipulate to shake people out, and look, we continue higher. So if you look, and we'll just mark my entry point, which was on the close of this day, so around 2,400. I believe the trade never went into any drawdown above like 2 or 3%. Like this literally has continued to run. I mean, if you just kind of go here, yes, we consolidated for a little bit, but once again, the momentum was there on the inversion, so I'm fine entering. And I'll discuss stop losses in a second, okay? But we never hit it, so it didn't really matter. But look, we just run, and if you play it, boom, we keep running. There was another setup right here actually. But as you can see, yeah, you enter on that daily close right there, and the max drawdown that was ever experienced in this trade was, look at that, 1.5%. Really crazy. 1.5% drawdown and a straight, basically parabolic 90% move up, all caught because of this daily and weekly chart confluence of the STIM model. Okay, so I often teach the STIM model in the context of day trading ES and NQ futures on this channel if you guys have watched my other videos, but I wanted to make this video to show how well it really works for swing trading as well sometimes. My initial target, I'm already out of most of my position. The initial target was this batch of relative equal highs around 4,100, okay? So I didn't really expect it to run much past this, although it has, and I have a little bit of exposure still, not as much as I wish I did, but you know what, that's life. The trade was great, and I just wanted to kind of use this to show you guys how the STIM model works for swing trading. Now, once again, to tell you guys about the stop loss, my stop loss would have been a close back below this inversion. So notice we have this red box, that's the bearish for value gap that we inverted. Say we had a daily close, right? Because we're taking this based off the daily chart. So if we had a daily close back under this red box, it has to be a close. Don't set a hard stop here and get taken out by a wick. It has to be a daily close under this level. And at that point, you get out, take the L. My first target was this internal high right here at about 2,800, which hit within about 2 weeks. So very nice trade, right? And once again, it's a swing trade. Some people like the day trade. Some people like the in and out. I like both. I like swing trading too. I'm going to start publishing a lot more swing trading content because this STIM model actually works on common stocks too, right? Like the big techs, all that. So there's going to be a lot more videos on it. But just understand that this doesn't really take much work, right? Like you find the setup, you got a chart in the off hours, but then you enter and you kind of just let it run. I mean, you're not really actively managing anything. This is just a straight Ethereum position. There's no leverage involved. I mean, you could have done calls on like ETH, the Ethereum ETF. I think it's by BlackRock. You could have done the ETHU shares, which is like 2x levered Ethereum, but literally just plain Ethereum, like the crypto itself is up 90%. So no leverage even needed, especially if you're swing trading. So like I said, very nice trade, worked out to perfection. And just to kind of continue to prove my point, like there's literally another setup right here. Okay, so let's go to the weekly. This was a re-entry. I actually didn't take this. I'm not sure why exactly. I guess I wasn't really charting Ethereum this week. I was kind of just letting my runners ride. But I did not get this re-entry. But this was actually a goated re-entry right here. So you can see we had a bullish weekly fair value gap on Ethereum, market green, bullish gap, and we traded back down into it. And if you look at the daily chart, we swept this liquidity right here, right? This is a very significant internal swing low, extremely obvious. If you walk away from your chart, you'll still be able to see this low, this wick right here. So it's a very obvious swing low. We come down, we sweep it easily, and then look at this. Perfect inversion STIM model right here. You have after you've swept liquidity and you're delivering out of that weekly gap, you have a bearish daily fair value gap right here, okay? And as you can see, we end up inverting it with strong momentum, right? This inversion candle right here, a 6% day, strong momentum. You get in, look at this. You never close below. Yeah, there's a red day right after, but you're still in the trade because remember, you didn't close below, so you're not stopping out on the daily. And boom, right back up to the current highs of 45.72. Simple as that, right? And the best entry was down, in the 2400 range, but there was literally another at 37, and those entries, and then in and of them, holy shit. Guess I can't talk. I'm getting so excited about Ethereum. Those entries in and of themselves are already up, right? Like 20 something percent, even if you got in late compared to me, just off this model. I think there might have been another one down here. Yeah, there was literally another one down here. This was the very bottom, by the way. This was 1300. So right here at like 1800, there was actually an entry. Look at this. We came down, took out a bunch of lows, right? We took out this swing low, developed a daily bearish gap. Now, of course, this one ended up consolidating under for a little while, but you don't enter here. You enter here. Once we close above, it worked out perfectly. Let's actually, this is just a fun experiment. Let's see if this delivered off of anything. So let me just clear the chart. Okay. Let's look at the weekly. So this was the bottom in April. And yeah, actually, sure enough. So and once you kind of use this model enough, you'll get good at eyeballing it. Look at this. Weekly bullish gap, right? We're on the weekly chart. Weekly bullish gap right here. Tons of swing lows right here. You sweep them out. And let's go back to the daily around April, okay? So we swept the swing lows. We've tapped into a weekly bullish gap. We have created a daily bearish fair value gap. You enter right here once we close above, right? So you're not trying to time it. You're not getting in down here in this hellhole of consolidation. You're getting in right here once we invert STIM model. So this was at 1800. So this was an even better entry actually than the one I got, but same model, like literally clockwork. Weekly fair value gap, daily entry, like 3 examples on Ethereum within the last few months that I've just gone through. And like I said, this works on any time frame because price is fractal, but this is just a good example for anyone who wants to swing trade crypto because it's worked on Bitcoin too. I'll make another video on it literally, but look, boom. Some consolidation straight up, then you get a little more consolidation, fake out dump. Oh, there's the STIM model again, entry right there. Massive run, STIM model again right now, boom, entry, and now we're at the highs. And next time we get another STIM model, I'll probably add more Ethereum because it's clockwork. I've just shown you 3 examples of this exact model playing out within the span of like 4 months. I mean, it's only August and we just went through 3 examples since April on Ethereum alone. So imagine the other opportunities in this market using this model. Now, if you are still watching, you're probably serious about trading. If that's the case, make sure to like the video and subscribe. Also, make sure to join my free Discord linked in bio. It is completely free. I don't even have a paid version. No credit card, no email, none of that BS. Literally click the link and you're in. I do free live streams in there every once in a while, live trading, ES and NQ. I post up daily bias things. I even posted this exact swing trade opportunity in the Discord for everyone to see, and I know some people took it and profited. So, like I said, if you're not in there, you're missing out. You lose nothing. It's completely free. And once again, I'm not trying to sell you anything, but make sure to like and subscribe if you like this, and I appreciate you all for watching. I'll catch you in the next one. Peace.